Hi, David Bassanese here, Chief Economist at BetaShares. This is a snapshot of my latest market trends report. Just reviewing the past month over March. The global equity rally continues to power on. We had the MSCI All Country World Index up 3.4% or returning 3.4% in the month. The ASX not too far behind, up 3.3%. And listed property in Australia having a pretty strong month again, up 9.6%. And I think the theme of the past month has been bond yields easing back a little bit globally. We've had central banks, particularly the US Federal Reserve, reaffirming its expectation at the moment that it's going to cut rates 3 times this year. Its latest Fed meeting report basically maintained its forecast for 3 rate cuts this year. The markets were a little bit nervous that they would have fewer rate cuts planned given the higher than expected inflation results that we've seen in the last a couple of months. So that was supportive for markets, reassuring for markets. In Australia, also the RBA, it's not as gung-ho about signalling rate cuts as is the Federal Reserve, but just in its latest few statements, it did what I call glacially change its guidance in the sense of saying it's not ruling anything in or out in terms of interest rates, whereas a month or so ago it was talking about whether or not it may need to raise rates one more time. So a glacial shift toward a more neutral, if not easing policy bias by the Reserve Bank. Look, all up, the end result is that bond yields eased, which helped to support equity markets further. Global growth continues to hold up. The corporate earnings outlook still looks pretty solid, so that's also supporting markets. What was interesting also in the month is despite the easing in bond yields, it was really some of the value parts of the global equity market that did better. So global gold miners, our MNRS ETF, for example, returned something like 19%, but other value exposures like financials, food also did pretty well during the month. Nasdaq also did okay, but just not as well as we saw in some of these other areas. Now, this may well be the beginnings of maybe a rotation to some of the cheaper non-tech, non-growth parts of the global market. It's too early to tell, but it was just interesting that we did see that performance in the month. That's pretty much it for now. There's obviously a lot more information in my market trends report. If you'd like to see the full details of that report, please visit the insight section of our website. Thanks for watching, and I'll see you again next month.